David, the entire market is up this morning, but you're looking at a few stocks that are either down or lagging the rest of the market. What do you have off the top?
First two stocks I was looking at were American Capital Agency and Annaly Capital Management. I feel like a broken record every day.
You sound like a broken record.
The past couple of weeks, we've been in here every day. We're talking about these mortgage REITs just continuing to get hit. You talked about the broader market being up today, and it kind of highlights something that surrounds this stock is there's a disconnect between the broader market doing well, economic activity picking up, and what these stocks do. So here at The Fool, we like to buy great businesses that have great operating businesses that do well when the economy does well. These stocks aren't really in that zone. These are kind of reading the tea leaves in terms of what's the Fed going to do, what are interest rates going to do, and the more uncertainty around those interest rates, the more these stocks are going to get hit. Where I'm kind of interested in these stocks is we talk about reading the tea leaves of the Fed, and that's not something that we want to try to do as investors. But I wonder if all that negative uncertainty has kind of made its way into the stock, and maybe Wall Street is kind of looking at this and saying there's going to be a short-term pain if interest rates change. But if I take a 5-10 year view of these, is there opportunity there? I don't know. What do you think? I'm starting to get a little more interested the more pessimism that comes into these stocks. What do you think?
Well, I mean, honestly, there's got to be a point where these start to get attractive. Mm-hmm. And it's not any one of them that I'm going to be interested in looking at from that frame point. The special sauce for a mortgage REIT is its management team, because essentially, other than its management team, what you have is just a pile of assets. You've got a balance sheet that's chock full of mortgage-backed assets, and in a lot of cases, some hedging instruments to hedge against the interest rate environment. But it's the management team, their ability to navigate the different interest rate environments and to anticipate what's going to happen. That's what makes the difference. For me, what I've heard from Annaly Capital, they've given me the most confidence so far. I haven't been crazy about what I've heard out of American Capital Agency. They don't give me their management team doesn't give me quite as much confidence. But my suggestion for investors looking at these stocks continuing to fall and saying, like you're saying, which is, I think it's a reasonable thing to think about now, at what point do the drop in these stocks make them that much more attractive? And my suggestion would be to tune into management, tune into what management has been saying, not just this past quarter, but over the years. Take a look at what management has been saying over the years. Figure out who you're going to be most comfortable backing, and go with that team.
Right. You talk about the Annaly management team, and I agree with you that they're kind of the gold standard, in my opinion. But to give American Capital Agency some credit too is they went out and raised some capital when the stock was trading above book value. Now it's considerably below book value, or the stated book value. So I would still probably push it towards Annaly's favor in terms of who is the better management, but I think it's worth noting that they did raise capital when they're above book value.
To be fair, they raised capital though, but where did they? How did they have to deploy that capital? I mean, to me, this isn't a great environment to be raising capital and having to deploy it into this. I'd rather wait and have better opportunities for putting that capital to work. But I mean, you do have a half point there. I'll give you a half point there that raising capital at above book value is a reasonable decision.